Welcome back to the latest edition of LUMA's Market Report. I'm Conor McKenna, Director at LUMA. We're finally at the end of 2022, which has been just a crazy year with an array of macro headwinds and a huge tech sell-off that frankly is just way too much for us to cover in this short video. So remember, we publish a full market report on the entire year that's available on our website, lumapartners.com, or through the link below. Be sure to go there to check out all of the data on ad tech, martech, and digital content across M&A, capital markets, and private financings. For today, what I'm going to focus on is a more recent trend we've noticed around stabilizing valuations in the public markets for ad tech and martech. Let's get into it. So last quarter's video, we talked about the 10-year historical trends in ad tech and martech valuations, whereby we're reverting back to the mean that we've seen over the last 10 years. If you haven't seen this video, would highly recommend going to lumapartners.com to view it and find out about all the nuances that have happened over this 10-year period. For today, what we wanted to do was dig in on a more recent trend around the stability of valuations that we've seen over the last few quarters. So if you look at this chart we're pulling up, you can see the valuations of ad tech and martech cohorts since the start of COVID. And as you can see, it's clearly been a roller coaster. Things peaked at the end of 2020 and then maintained very high valuations really throughout most of 2021. And then as we've all known, there's been a big tech sell-off throughout this year. But what's important to notice is where that actually transpired and what's happened since. So if you look at the far right side of this page, you'll notice that the drop-off in valuations was really in the first half of 2022. And that's where you had ad tech and martech going from over 10 times, dropping down to about 5 times LTM revenues. But since then, things have stabilized. We've now had 3 quarters of more stabilized valuations. This is extremely important as we head into 2023, as it sets up a much stronger base for deals to get done. People have now rationalized both sellers and buyers as to where valuations should be and can start to talk on the same page. And that really opens things up. Now, with the context of stabilization in valuations, we want to talk a little bit about what we're thinking about heading into 2023. So clearly, we're still dealing with some macro challenges and the threat of recession and what that will potentially do to advertising and software budgets. But with the stabilization of valuations, we're looking at a very different year from a deal standpoint. Now that valuations have been more stable for a couple quarters, buyers and sellers can start to have these conversations, both at the larger level and potential public take privates, as well as the more strategic level where companies can start to leverage their balance sheet, leverage cash if they have strong operating margins in order to acquire companies to get ahead of the future. And there are still some very exciting sector trends that are going on, such as the growth in CTV, whether it's new channels like Netflix coming on board, or things like commerce media, the mobile in-app ecosystem, and over across all of that, what's happening in identity that is impacting everything, which is certainly creating challenges, but also lots of opportunities. And throughout this year, it's been very hard to get those types of transactions done. Now that we're starting to hit stable levels, those conversations are picking back up, and we really noticed them even starting since Labor Day. So that is what we're most focused on heading into 2023 is how do these stabilizing valuations shift the deal environment from what we saw over the last couple of years. That's it for us. Remember to please click the link below or go to our website, lumapartners.com, to download our full 2022 market report. I'm Conor McKenna, signing off.